Good morning, good afternoon, good evening, depending on where you are. Welcome back to yet another episode of the Equity Market Update with Irfan Khan and Joseph DiVirgilio.
What investors must know this week. I'm Joseph DiVirgilio, hedge fund manager, 25 years plus on Wall Street, managing long-short equity funds. Irfan is my partner in crime. I leave it up to him to describe who he is.
Partner in crime, investor. Yeah, that's good enough, I would say. Yeah.
Yeah, we have a lot of stuff to get to, especially this past week. So I want to get to what the markets have done, economic data releases, what happened just about last night with the White House Correspondents Dinner and that shooting and a bunch of other stuff. But before, as usual, we start with the statistic of the week. This is kind of more of a fact, but go ahead, all yours.
Yeah. So something quite recent in 2025, so last year. The Magnificent Seven tech stocks alone accounted for 42.5% of the S&P 500's total annual returns. That's more than massive, Joseph.
It's huge. It's
if,
huge.
if the S&P 500 includes, actually not 500, but I think 505
There's
stocks.
like 500 and some. Yeah, that's right.
Just seven of them accounting for almost half of it's humongous though.
This statistic is this number is going to come back to bite us later when we talk about what's about the earnings expected. But so getting back to this, this is a scary thing because you have seven stocks that are basically pushing that have pushed the S&P 500 up last year. There's been a correction in some of these companies starting October 7th, the 8th, around then there until just about recently. Not all of them have made new highs yet, but the actual Nasdaq 100 and Nasdaq and S&P are in record territories. In fact, we saw mixed results during the week, ending in April 24th. But the Nasdaq is up. Was up 1.5%, closing at a record. The S&P 500 was up 0.5%, reaching a record as well. Dow Jones Industrial Average was up 0.4%, but did not break a record. And the Russell 2000 finished at 2787. That's about
still nothing. No major changes, but all positive, which is quite a welcome.
But there's. We had a good week because we had strong corporate earnings, but against the geopolitical uncertainty, the markets continue to go up. Even if with this oil bottleneck in the Strait of Hormuz, I find it very interesting that the markets are going up and there's no resolution, or at least nothing in sight with regards to what's going to happen with Iran. And to me, it's telling you that the market wants to go higher. If there were no war in this moment, this market would probably be up 10% this month.
Some people would say that Trump has turned the cards in his favor by doing by having that naval blockade.
How so? Seriously, how do you? He may have injured the possibility for Iran to cash on its oil while exporting or charging vessels that pass through there. But I think that they can last longer than the rest of the economy can, and world's economy can. Think about it. We have Lufthansa, I was reading, has canceled 20,000 flights until October. Imagine American airline companies are doing the same thing because they see a shortage of jet fuel. Europe has 5-6 weeks worth of jet fuel left, so they could send us back in the Stone Age much faster than we could do it to them. Truth is, they still have a lot of leverage, and they're a 6,000-year-old civilization. They're proud, and they're not going to go down without a bang. And so to me, this is again a senseless war started because of Trump needed a distraction from the Epstein files, as I always say, and Netanyahu had the village clown agree to his wishes of wiping out Iran off the map. But it's a different story. Anyways, but, we had stock markets, and so we had Nasdaq and S&P 500 that they have reached new highs. European markets have tumbled 2.4%, and that's a direct result of this conflict. Because American markets are going higher, the European markets are going lower because they are pricing in the risk. U.S. equities are not. Mm-hmm. That's it. And this is the 2.4% is the stocks, the Europe Stock 600. That's the index that I'm referring to. So now we have tech and AI focus, or earnings focus on this week coming in. So and a critical Federal Reserve meeting to determine future interest rate moves. Right now, there's a 99%, at least one rate cut for this year. But so going back to this magnificent seven, we're going to have some of these companies report, and they're going to, in my view, determine the path of the market going forward. But I am in Tom Lee's camp. I said this before. I love him. He's great. He's a great forecaster, and he's bullish, and so am I. Obviously, never in a straight line, but
what if say the stocks that you have been focusing on are all positive or significantly positive, but at the same time, then you have an opposite trend being manifested through the earnings that are going to be reported with the Magnificent Seven, or at least some of them, because that obviously they carry different weighting, right? So,
well, if you have stocks that are correlated to those Magnificent Seven, maybe I have a problem. Magnificent Seven. You might want to hedge. You might want to lighten up. But I see the sector is relentless. So tech and AI, to me, again, AI is the future, and we've seen a resurgence of profits from Intel. I mean, Intel has actually broken above the dot-com bubble levels, which, I mean, it never recovered. But so if you're too heavily exposed to tech, if there's negative signs from the Mag 7's earnings coming in next week and the next weeks, then I would definitely lighten up and try to minimize your exposure. That's what I would.
Then again, I mean, with the weighting that these Magnificent Seven have on the overall S&P 500, if somebody just says, I've just got most of my money in index fund or an ETF that tracks the S&P 500, then they probably
if you're properly diversified, and diversification is key. If you're properly diversified sectors, geography, I shouldn't be so. If you're a long-term investor, you're not going to be picking the tech ETF that you have to be invested in for the rest of your life. You just buy yourself a nicely diversified ETF that tracks an index, and buy 3 or 4 of them that expose you geographically, and you're good to go. And then you add the fixed income element as you grow or grow older, and reduce your equity exposure as you grow older. So, but when you're young, you can even diversify in sectors. You don't even have to care about geography. But I like the tech sector, I like the industrial sector, I like the utility sector, and I'm going to put my money there. Question is, where is it? In Europe, China, US, or where do you want to do that? Well, that's entirely up to whoever is investing. But again, being diversified is key, and being overly concentrated in one sector can hurt you. I mean, it definitely did. Tech has always done great long term, but as usual, they're very sensitive when it comes to inflation rates, and so you want to stay diversified, because hits come. The market gets punched every once in a while, and if you cannot bear the volatility, if you have a shorter term horizon, I would suggest that you stay index oriented and not sector oriented, because this go in cycles.
Yeah.
And you got value, growth, GARP, invest. So it's like it's lose you can get lost in a glass of water when you start thinking of all the different ways you can invest, and that's why I say indexing is.
Then you run the risk of overcomplicating things
Oh,
and
absolutely, absolutely.
try it. You basically want to start acting like a sophisticated investor when you're not, and there should be no reason for you to start doing things so in such a complicated manner, right?
So, like for example, like take here you have value or deep value, and here you have aggressive growth, and in the middle is GARP, growth at a reasonable price. I am somewhere in between here, right? So when I invest my capital, so I am not overly aggressive, but I am aggressive. I mean, I would say again, but with my head screwed up right, and that's what I usually say. I'm still dealing with this cough, still weird. Consumer sentiment slumped to the lowest on record. This was one of the key economic data that we got last week. I think that it's at the lowest that they've actually ever started collecting data. So while last week we were talking about how we might see the possibility of consumer sentiment going up, but because of retail sales that had jumped, instead we see retail sales have jumped, but U.S. consumer sentiment has come down, which means that only a small percentage of the economy is actually making the retail sales go higher. And some statistics are saying between the 5 and 10% wealthiest Americans are the ones that are keeping the economy going in terms of sales, spending, buying. So that's not that's not a good place for it to be because you have 90% of the United States that cannot afford to go out and buy, and whoever's keeping the economy afloat is only a small percentage of the population, which is the richest ones.
Yeah.
So that's pretty much it. We talked about Hormuz already. I don't know what's going to happen with Iran, depending on how you like to pronounce it. But this was completely now Trump. Trump is in a position where if he walks away, he looks stupid. If he bombs them more, he's going to get a revolt in the United States because people hate it. This war is not popular at all.
You think that if he was to start firing again, people will actually react more vehemently towards him now in the U.S.?
He is at 32% approval. The lowest you can actually go, it's I think 26. So this is the lowest of any president. I think who touched these levels was Bush when he started the war in Iraq. So I think that the United States is fed up with this. Epstein files, corruption, taking bribes, promises that he made, no wars. I'll tackle affordability. None of that. Everything went up in price. Americans are fed up. The polls are showing it. If he does anything stupid, chances are something may happen with the American people that they're going to be fed up with it. This ties into what happened with the White House Correspondents' Dinner last night. Some guy by the name of Cole Thomas Allen, decided to show up at the Hilton Hotel in Washington, D.C., where they were having the dinner, and started shooting. Only one Secret Service member was hit, but saved by a bulletproof vest. And
obviously, this is definitely something that should not be happening in any case.
Whether
you agree with whoever's running your country.
Absolutely agree. I condemn anybody who uses firearms. The problem is, look, you have Trump that is as unpopular as Viktor Orban was in Hungary until last week. They had an opportunity to vote and get him out of office. In the United States,
what a landslide victory that was for the opponent.
And so in the United States, they have, before they can get to vote, they have more guns. So you do the math. I mean, you know, these things are going to continue to happen. I mean, until somebody somebody smart starts doing something about the gun problem in the United States. Contrary to popular belief in the United States. So actually, you know, the NRA's message is, you know, you have to fight violence for more guns.
Well, of course, they're right. They're National Rifle Association, right? So they're a lobby which is pro-arm.
But anyway, so stock of the week. I want to follow up on QuantumScape because we talked about it last week. It had earnings, which I had forgotten to mention that earnings were coming up a couple of days after our last episode. Stock went up 32% intraday to close down to just about 4 or 5%. Massive jump, and then it just deflated so fast.
Yeah,
that is a tail. That means that the stock was not ready to move that high, but it did follow through with another 4 or 5% the following day. So
mind you, if somebody had gone and bought some calls on that, then they would have made them, you know,
fortune.
a lot of money, a fortune.
Yeah. So what I'm saying is, don't get discouraged by the fact that that QuantumScape did that and then came back down, but it's prone to do it again. And it's just, numbers were phenomenal. They're about to commercialize their solid state battery technology, and they also said that they saw interest from the AI industry out of all places because of their battery technology, you know, assisting servers and whatever else. So AI servers. So this is going to be a really nice play, and I am very hopeful for. You know, I'm still actually bought more stock. So remember, this is not investment advice. Don't ever go out there and buy a stock just because Joe DiVirgilio mentioned it. This is my portfolio. I'm discussing it very fun. Him and I invest in the same stuff. And so we're just discussing our portfolio. Always talk to your financial advisor before you buy anything that I have.
And there's a very simple reason for that. We could not possibly know each and everybody's situation and what is the most ideal investment setup for everybody, right? So
yeah,
yeah,
this is still, you know, while they're about to commercialize and everything else, it's still a speculative stock, so it still won't make money. So I won't be. I'm not going to.
there's a certain degree of risk attached to it for sure. Yeah,
Absolutely. So I'm not going to come out here and tell people to buy stocks that are not profitable yet. So that's my thing. I don't mind.
do your own homework for sure. Yeah.
What I like, what I like, what I've done. Yeah,
Okay.
that's pretty much it.
Okay. So I guess we can wrap it up for this week as well, Joe.
Yeah, we'll see each other next week. Make sure you comment, share, like.
Well, I think we should take a moment to say that we really appreciate the fact that we see there's a rise, an increase in viewership,
Yeah,
which obviously makes us very happy. We
thank you
hope we
very much.
continue on this trajectory. This means a lot to us.
And we would love it if you
Uh,
subscribed. We will really
mhm.
appreciate it. We really appreciate
Yes, like, subscribe, comment,
it. Comment.
share.
And
By
tell,
all means, please, if you know people who would be interested in following this channel, please just take
feel
a
free
few
to share.
seconds to just share it with them. Okay.
And make sure you yeah, subscribe. And comment and ask us what you want us to talk about because we like to.
Exactly. I mean, we have our own obviously list of things that we'd like to bring to you. But by all means, we want this to be within reason as interactive as possible. So obviously, if you do have questions, as we have seen on a couple of occasions in the last few weeks, by all means, please do come and ask.
Thank you very much, and we'll see each other next week.
Take care. Bye bye.